Hello, everyone. Welcome back to How to Trade in our Switch Markets Live series. Now, this is going to be the 5-8-13 workshop. I'm Shane Vernier, head trading coach over at How to Trade. I see a lot of familiar faces in the How to Trade workshop area, and I also see a lot of new faces over on YouTube. So I want to say a big howdy and a hello to everybody out there. International Kitchen, good to see you. Rajat, X-Light, good to see you. X-Light, Hayne, let's go. Let's pump it up, see if we can make a few bucks. Whale Dewasti, good to see you. Open to learn, that's fantastic. If you're going to trade, you got to want to learn. Yes, sir, always a pleasure. Yes, sir. Tuku, good to see you, Tuku. Welcome. All right, guys, we've got a few things. Tech Odyssey, hello. Truly global community here. We have people from all over the planet, the U.S., we've got U.K., we've got Far East, we've got India, we've got Africa, we've got everybody here. Australia, Asia, you name it. They join our streams, and that's fantastic. I always like to talk to traders from everywhere, folks from all over the world. It's really an interesting time we live in with all the technology. Lita, always a pleasure, Lita. Glad you made it. We're going to do the 5-8-13 workshop today. I'm going to trade. We're going to make some live trades. I'm going to go to whatever time frame we need to do to execute some trades to show you exactly how this strategy works. And we'll see. Well, we're on a pretty good winning streak with these live streams. We'll see if we can actually make a few bucks. There's a few trades that I am watching with this strategy. I just don't know that they're going to set up. One's on a 30-minute chart for the Great Britain Pound USD. We're gonna monitor that one as well. Team Marina, good to see you, Team Marina. All right, guys. There are a couple things that I want to cover before we start the workshop, though. There's some news stories that we have to be aware of, and we also have a trade idea that I want everybody to be up on, especially those of you that are outside of the How to Trade community and you don't actually get these trade ideas sent out to your email directly. Now, the first thing that I want to talk about here is going to be the news cycle. We're going to do just a brief news brief. S&P struggles for the second day as Trump says no extensions to August 1 trade deadline. Tariffs are starting to play a little bit of a role. Yesterday I said don't worry about tariffs. I still say don't worry about tariffs. But remember, These announcements are coming fast and furious. More tariffs, higher tariffs, tariffs for longer, no extensions, no exemptions, no deal, apparently. So we're going to see exactly what happens as that August 1st deadline approaches, what happens to our markets. Remember the April 1st deadline. It was a carnage on Wall Street. This may be shaping up to be the same type of thing. So we're watching tariffs right now closely. I don't really care about what's been said so far. I don't think any of it's important, but we're waiting for that big announcement. We're waiting for a big announcement, maybe something 100% tariff or something specifically targeting the BRICS nations. We've seen a lot of scuttlebutt today around the Russia-Ukraine situation. There could be some more big announcements coming soon. We just don't know. Tomorrow we'll know more. As always, that's typically is how news works. And this is the other thing, Antifa and ICE, these raids, there was a lot of targeted attacks on federal agents here in the United States. Get ready for more of this. Now, this isn't a political stream. Whatever you think about anything, that's fine. But what we are starting to see is violence. And typically we see these in the summer months here in the United States and in North America. Weather gets hot. These folks decide that they're going to activate for whatever reason. Be very careful with these headlines because if, in fact, some of these attacks do escalate, you're going to see a major crackdown in a big way by the United States government on certain areas in this country. There's no two ways about it. Be ready for that. Civil unrest can drive uncertainty, and uncertainty can drive uncertainty in our markets, and typically that means bearish price action. We're watching this closely. These are unfortunate stories, but we got to talk about them because you need to be watching for those types of things. They can definitely move the markets. Okay, on to our trade idea. Then we're going to get on with the workshop. I promised, I told you I'd keep the news brief quick. A lot of times I end up talking about news for way too long. But this right here, Australian dollar, US dollar. Now, last night during the US overnight, the RBA, Reserve Bank of Australia, got involved. They held rates firm at 3.85%. So no move out of the RBA. They cited a global trade uncertainty. That would be the tariffs and all the jazz that's going on with the tariff war out of Washington, D.C. But also, they also cited, they didn't say persistent inflation, but they said stable inflation. You know what stable inflation is? That means prices are still going up, but they're going up the same rate as they did last month. Inflation's not under control anywhere in the world. And the RBA sort of said, we cut rates a few times. We're going to go ahead and slow our roll and take it easy as we roll a little bit deeper into Q2. Geez, I think Q2's over, isn't it? Yeah. I think we're getting into Q3 here relatively soon, man. This year is just clipping by. This right here is going to be our trade idea, though, our Australian dollar, US dollar. This is your MT5 platform. You'll remember our 920 EMA. I really love this strategy. If you haven't seen it, check it out on the How to Trade Calm YouTube channel. But this is pretty interesting stuff. You got the 9. This is a weekly chart now. It's really tough to trade a weekly using a crossover strategy, but there's your crossover right in there. So theoretically, that would have been your bid. And this is what I call a slow grind. The bullish bias is there. We're definitely looking at the top side of the market because price is rising. Now, that seems like an obvious thing, but look at how it's rising. It is ugly. It is bowling shoe ugly. You got a big break there and then a pullback and then a break and then a doji and then a pullback and then a big break and then a little break and a pullback. That is a nightmare trade, especially if you took a long. I mean, that's one of those where you just take it and you say, well, you just buy it and walk away from it and hope it goes well, because if you're following that price action day to day, it is tearing you up inside. I've been there. I don't trade like that any longer. So the first thing I wanted to do was put a Fibonacci on the last 2 weeks because that has been a significant bullish move. And you can see right there, there's our Fibonacci retracement sequence, and our pullback buy is going to be right at the back end of that golden zone. The golden zone is the area between 50% and 62%. I'm looking at 62%. The back end of that being a pretty darn good buy. Our key levels are out in our trade ideas. I believe that's somewhere right around. Let me take a look. 64, 64, 70, 64, 60, somewhere like that. That's going to be our bid though for the Aussie. So a pretty darn good trade there to get started this week. Full disclosure, today was a fantastic trading day for me personally. They aren't always, but this was a good one. This was a real good one with gold futures. We got a nice big bearish move down about 1% at one point, but then we got the bounce back. So we got a nice move, not really a trend day. We're not seeing those breakaway trends in anything anymore. And that's going to really lead us into our summertime trading philosophy, which is rotation. I'm going to talk more about that tomorrow at the FOMC minutes. Today we're going to talk about the 5-8-13, which is not a rotational strategy, but if you can get in on these trades towards the bottom of the market or the top of the market, you can still get good directional price action using a 5-8-13. This is one of my favorite strategies. I love the 920, the 9 EMA with RSI. I love the 920 with stocks on the daily. This is probably, I would say this would be my go-to scalping strategy for anything under a 30-minute chart. And that's exactly what we're going to do today. So I got way behind. Lads, I got to say hi to everybody. Let me see. Whale, watching from Ghana. Thanks for making it. Thanks. You got to be staying up late. I don't know what the time difference is. It's about 11 o'clock in the morning where I'm at. I think it's probably evening time for most of you folks. So I sure do appreciate you spending a little bit of time with me today. And remember, if you miss any of these streams, catch them on demand. They're all cataloged on our YouTube channels. They're also cataloged inside of the How to Trade Trading Room. Lewis Shepard, good to see you. Lewis, welcome. Let me see. I am terrible with names, so I'm going to share Lesto Resego. I'm going to go with Small Yeezy. All right, Small Yeezy, good to see you. Bobby Bob, always a pleasure, Bobby. Good to see you back on a live stream. I appreciate it. Remember, if you guys miss any of these live streams, they're cataloged all over the place. Forex Signals TV, these are our YouTube channels. Forex Signals TV, Switch Markets, and then also How to Trade Calm. How to Trade Calm's got a majority of our strategy stuff that you may want to check out, including this one right here, 5-8-13 trading strategy. So I like easy. Easy is very, 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 very attractive to me. What I do in the markets every day is easy. I have a set of range numbers that I played today. I took 2 gold trades. They both came up aces. Walked away with a pretty good little chunk of change. I don't really have to do much the rest of the week. I love Tuesdays, guys. I love Tuesdays. Tuesdays are my favorite. I don't even care about Mondays. Tuesdays are where it's at. In any case, I love Tuesdays. Today was a good one. He's got me grinning ear to ear. So if you guys had a rough day today, maybe this 5-8-13 can help you get on track for tomorrow, the next day. All right, Sergio, hello from Germany. Right on. Sergio, oh, man, Germany. I've never been. I always wanted to go to Oktoberfest, though. I guess I'm like every other American. I want to go to Oktoberfest. That's where the big party is. But I'm gonna get there. I've been to London. I'm going to get to Germany at some point. I've got to. Dave's Apple, good to see you, Dave. Dave F19, hi, Shane. Hope all is well. Dave hopes for children and losers. We don't hope. We're confident. I'm confident you guys are doing well, too. And if you're not, well, let's get you on the right foot and see if we can build a little bit moving forward. Ronan, greetings from Israel. Our prime minister is visiting Trump. Yeah, we saw the Netanyahu was in the White House yesterday. And it was interesting. I watched some of the highlights. There's a lot going on in the world right now. An absolute ton. All right, let's get on with the show. 5-8-13 EMA Workshop. So in this stream, what we're going to do is we're going to sort of set you up. We're going to get you ready to go trading this strategy. The first thing we're going to do is we're going to go over our strategy rules. I love simple. There's 3 rules. We're not going to make this hard. There's 3 rules. Now, there are only 3 rules. But your success using this strategy is going to depend on which market you trade and when you trade it. We are looking for active markets during active periods. Right now, we're going to start with a Great Britain Pound USD 30-minute chart. We've got a trade sort of setting up right here. We pretty much always have a trade going on NASDAQ futures. I'm going to look at NASDAQ futures probably on real compressed time frames, and then we'll take a look at things like gold. Potentially, we could go to U.S. oil, but I don't think it's a good idea today. Even though we're up about 1%, the intraday action is really, really slow. Strategy rules. Here we go. There's only 3 of them. Oktoberfest looks great. Yeah, I would love to hit up some Oktoberfest. Great food. Maybe a couple of those great big pints. Those aren't even pints. Those are gallons. Get on a few of those. Is this a strategy you used for your trades today, Dave's Apple? No, it isn't. It isn't. Full disclosure, no. I have some range numbers that I use. To be honest with you, I haven't disclosed any of those formulas to the public. They're not hard. They're incredibly simple. But when I came out of the 7 V-Bar trading group, I signed some confidentiality agreements. And that's not a cop-out. That's the honest-to-God truth. And I do have some folks that are still affiliated with that group. Family members that watch these streams to make sure that I'm not disclosing anything. So no, I use some range stuff, but they're a lot like pivot points. I can say that. They're a lot like pivot points. That's for sure. Gold, laugh out loud. Yeah, we're going to look at gold. X-Lite. All right, guys, here we go. Let's get on with it. Let me see, Lewis. I've struggled with oil today. Oil's been terrible, Lewis. Oil's been terrible lately. We'll pull an oil chart at the end of the stream. Here we go. Strategy rules. Okay, guys, easy's better. 3 rules. When the EMAs, we've got a 5 EMA, an 8 EMA, and a 13 EMA. We'll plot all those on our chart here in just a second, or I'll show you exactly how to do that on TradingView. When the 5 crosses over the 8, the 5 EMA crosses over the 8, you're going to look to trade. So when it crosses over the 8, we're going to look to buy the market. When it crosses under the 8, we're going to look to sell the market. Now, here's the kicker. Price must be above or below all 3 EMAs to enter. So on a buy, the price has to be above all 3 of our EMAs. For us to buy. To sell, price has to be beneath all 3 of our EMAs to sell it. Now, our entry point is going to be on the close of the current bar, the first bar, right as that thing crosses over. As soon as we get our crossover and a bar close, we're trading. So you buy or sell on the first bar close. Relatively straightforward. Let's go ahead and see if we can get it set up. Now, I'm not going to talk about confirmation just yet. We need to sort of get this set up on our charts first. So this is a good look at a Great Britain Pound USD 30-minute chart that I'm looking at. Ignore this pane down here, at least for right this minute. You'll see price action sort of coming off. Now, I've got all three of my EMAs. I got a great question on YouTube, and this is a very simple one, but it's a tough one too if you don't have access to these types of things. The way that you're going to plot your moving averages, you're going to go up to indicators, okay? You're going to go right down here to moving average. Somewhere in here. Moving average, you're going to go right here, moving average exponential, and you're going to give that a click. Okay, when you give that a click, it's going to add a moving average to your chart. So in this case, let's say we were going to add the 5. It's going to bring up this window. You're going to add, and then you're going to have the ability to adjust the length down to 5. The source is always going to be the bar close. And then smoothing, forget about it. Don't worry about anything more advanced than that. Forget about it. We're making it nice and easy. Forget about it, huh? You don't have to make it hard. We're not worried about smoothing. We're not doing offsets. We're not doing any of that. We just want a base moving average on our chart. That's what we want. Okay, the question was, Shane, I can only add one EMA to my chart at once. I can't get all 3 EMAs on TradingView. I believe that's going to be a subscription issue. So if you're using maybe the free version of TradingView, it may limit you to the number of indicators you can have on your chart at any given time. I'm using the Pro Elite version or whatever the heck I paid for. I paid a lot for it too, but I got all the bells and whistles. So what we want to do here is, first of all, if you don't have subscribed for enough of those indicators, you're going to have to figure out a way to maybe to figure out how to get 3 of those EMAs on your chart. All right, that would be the first thing I'd recommend. Now, if you just aren't really sure how to do it, you just hit the EMA right here, the moving average exponential. You just hit it 3 times. Boom, 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 and that'll just plot all 3 of them. You go up here, you adjust your settings to 5813. And you're ready to rock and roll. Now for MT5, I want to go ahead and take a minute here and show you how to do this one. So now let's just put this dollar yen up. I've got my 920 on there too. Let's go Kiwi. Let's go with our Kiwi. Actually, I got the 920 on all these. Okay, so what we would do here is we would just go ahead and add our moving averages. So you go right up here. I don't know if you can see the top of my screen. You're going to click Insert. You're going to go to Indicators. You're going to go to Trend, and you're going to go right down there to Moving Average. You're going to click on Moving Average. You're going to dial in your periodicity to 5, 8, and 13 exponential. We were using EMAs. Apply to the close and pick different colors. If you don't pick different colors, you're going to instantly be lost. Okay, that's how you do it right here on your MT5. It's relatively simple. It's going to be the same functionality as I'm going to show you on TradingView. The reason why we use TradingView on these streams, I realize most of you guys trade on MT5. I'm transitioning. I'm learning more about MT5. You're going to have to be patient with me. But TradingView, I can go through these concepts quickly, and you won't have to sit there and watch me try to figure out how to manipulate the charts. Okay, that's easy. So now we're set up and ready to trade right here. Using 3 EMAs, yeah, you can do that. Let me see. Trader FX Mombasa, what time frame works best with this strategy? Absolutely great question. We're diving into time frames right now. T Marina, and if using the 5-8-13 under 30 minutes, is it best to add additional confirmation? 100%. We're going to start out with this 30-minute trade, which you don't need confirmation for. I wouldn't even be thinking of looking at RSI right here. Great Britain Pound US dollar. Now, to answer your question right here, what time frame, Trader FX, what time frame works best? If you're trading forex pairs, I love the 4-hour chart. That would be my bread and butter. Now, is that a day trading or a scalping? No, it's not a scalping. It's going to be more of a swing trading or a pure day trading type of approach. If we want to trade on low time frames, forex pairs, 30 minutes during that London-US overlap is the best. You probably get away with 30-minute charts on your local currency given your session. And what I mean by that is if you're going to trade like the London session, then you're looking at the Great Britain pound pairs. You can get away with 30 minutes. And the reason why is take a look at these moves. This is pretty good stuff right here. Right there's the beginning of the London session, 1 a.m. my time. Remember, my times on this chart are going to be for mountain times here in the United States. I'm up in Dillon, Montana, up way up north. Southern Montana, southwestern Montana, but way up north here in the United States. I'm in the mountain time zone, so that's going to be probably 3 a.m. Eastern, or that's going to be your British Open or your UK Open. And right there, you can see you've got good, solid price action. That crossover right there, you made a lot of money on that. 30-minute chart you can do. So if I was going to trade the Japanese yen, if I was trading yen pairs right after that Tokyo Open, I probably could go to a 30-minute chart. What I recommend, though, is make sure that whatever you're trading, the smaller the time frame you go, the more active the market has to be. And if you get under a 30-minute chart on the Forex, you need to be in there when the market's active. So right now, can we go to a 5-minute chart on the Great Britain pound? We could, and we will here in a second, but I want to set this trade up for you right now because I believe it's a pretty darn good one. 30-minute chart, Great Britain pound USD. Okay, right here we had sort of the big sell-off. Now you'll notice we've got our 13 EMA, which is going to be our purple. We've got our red EMA, which is what I call our hot EMA. That's our 5, and our 8 is sort of our mid-base, our midline, or typically our midpoint, and that's going to be your 8 EMA. 5 crossed over the 8. Okay, so right there we crossed over the 8. We are looking to roll. Okay, boom. What did you get right there? That was your long. That was your long right there. You say, Shane, what are you talking about? How come I went long right there? I'd say, well, I mean, number one, your 5 crossed over your 8, right? Look where that price bar closes. Your crossover's right here. So you're looking for this bar right here, theoretically. Just saying theoretically. Remember, we're doing this in hindsight, so this crossover didn't develop until this bar closes. I know that's a hard concept. It's hard, but you got to make sure that this thing crosses over. I tried to code this. This is one that I should definitely go through and code, because that way it's nice and easy and you can see exactly where the price bar, where your entry points are, like our 920 coded. I should definitely code this. I just ran into problems getting it to recognize when price was above all 3 moving averages. In any case, there's your close. There's your long. Now, you've moved higher. You bought in at 135.79. Now you're up at about 135.84. Just for the sake of argument, I'm going to go ahead and I'm going to send this thing long. Market order, and we're going to go ahead and buy the market. And remember, that leverage isn't even worth showing up. Let's see, market. Give me a market. I don't know. Let's add a couple zeros and make this fun, right? Okay. Remember, this leverage, this is paper dollars, or paper dollars, all dollars are paper. This is paper money, meaning this is demo dollars. Okay, so let's say that we entered the market. We should have already entered down here, but I bought in here just to show you exactly how we're going to manage this trade. There's a couple of things you can do if that's your entry point. All right, number one, you've got to identify your stop loss. Every trade has 3 parts: entry point, stop loss, and what? Profit target. Profit targets are tricky. There's a lot of different ways to view profit targets. I'm going to show you how I view them, and then we're going to show you how a lot of other people view them. So 30-minute chart, Great Britain pound USD. Where should my stop loss be? Here's how I would do it. If you want to play uber tight, you could go right there. I hate that. Typically, you get chopped up on those trades. Why? Because you're playing really tight. This market could flatten out. You could still be in great shape, but get stopped out. I don't want that. I don't want to get stopped out. That would only be about an 18 pip risk. If you wanted to do that, you could. You could also put it beneath this swing low down here. That's a swing low. That's what I call a spike. So you've got that bar right there is higher. This is a lower low. That's a higher low. That's your spike, okay? You could put it right there, down there at 135.38. You could do it. You could also put it beneath this position right here, beneath the macro swing low. Shane, what should I do? It depends on the amount that you're going to risk. So if we just bought in, say, from 130, and I'm just throwing my market order in there as our entry, 135.85, do I want to risk 135.23 on this trade? It's not going to be a scalp. It's going to be a long-term trade. It looks like it's probably a swing trade. If I want to risk that much, 1 to 3% of our account balance on any given trade, I'll look the other way. If you want to take a 5%, don't go above 5% on these trades. We're going to be taking a lot of trades. You don't need to go that high. Where can I put my stop loss? It's up to you. For me, I really love the idea of putting it beneath that macro swing low. I really like that. But is it expensive? And the answer is, yeah, it is. It's an expensive trade. That means that we're going to risk, somewhere in the neighborhood of, let's see, 79 and 23. That's going to be what, about at least 56 pips, something like that. So if we're going to risk 56 pips, we got to get paid 56 pips at least. And that's just a basic 1-to-1. So there's a couple ways you could build your risk reverse reward. You could just put it at a 1-to-1. So 56 up over, 135.84. That was what they filled us at. What is it? 56, 16, 16 and 40. So what would that be? 40, something like that. So that would be probably your 1-to-1 right there. I don't mind that. I think you got a legitimate shot at that. And the reason why is market structure. A lot of smart money traders, and there are a lot of folks asking me, Shane, teach me smart money. I'm not a smart money trader, but I understand market structure and the idea of order blocks. I do understand that. This is what I would call, back in the old days, us old guys called that just a value area. All it is a value area. You're chopping sideways up around 136 and a quarter, living life, enjoying it. And then you got the big sell-off going into that European session, that London session, which was another trade that you could have got. That would have been your sell. Boy, howdy, did you nail that one. And now we're looking to buy this thing on the comeback. That would probably be your profit target as a 1-to-1. Now, if in fact you wanted to go bigger, then it's just about, one thing I would look at is just these liquidity sweep areas. You'd probably be looking up at your next order block, potentially looking back at this area back on the 3rd of July, which would be Thursday's high. You could probably shoot for that as well. I have no interest in that at all. Now, is this a day? Is this a scalp? No, it's not a scalp. It's a day trade, maybe a day trade, more like a swing trade. All right, we're going to do some high-impact scalping here. And in order to do that, we need confirmation. Way behind on the questions here. All right, guys, let's see. God, there's a lot of questions. All right, let me see. True. Can you check out the EMA, or you can check out the EMA indicators on the community? Okay, gotcha. Let's see. Use 10 and 1. It will give you as many as 10 moving averages and one indicator. Okay, there you go. Great. I love to see you guys helping each other in the live chat. That's fantastic. Dragon Doji is one of the common confirmations of a long trend. Dragon Doji, I like dojis. I like hammers. I like hammers and inverted hammers. Those are my favorite for reversals. Let's see, under the previous low. Okay, so something like that probably is what you're looking at, that inversion. I'd call that an inverted hammer, meaning you're looking for continuation, but if you don't get to continuation there, you got great rotation. You guys don't understand what I just said, but that's fine. Neither do I. So the cross doesn't need to be above the close of a bullish bar. I thought the bar has to be bullish. No, it doesn't, T. All we're looking for is price to close right up here. We just need it to close above the moving averages. And the reason why is our 13-period EMA. I get this question on almost every one of these workshops. The 13-period EMA is your confirming tool. That is the most important EMA in my book. The 5 crosses over the 8 all the time. We get into those weave patterns where the market really flattens out like this, and the 5 is just crossing the 8 all the time. Well, price has to be on one side or the other of the 13. So if we crossed over right here, I am fine with that. We got a nice rapid pullback, and then we bounced back. I'm good. I see that as confirmation. The 13 is everything. Shane, why use the 13? Just use the 5 and the 8. You don't want to just use the 5 and the 8. You're going to get chopped up. The 13 gives it that extra added oomph. That 13 EMA shows you, it really does confirm the short-term price action, the short-term trend. So, speaking of confirmation, let's talk scalping now. We're going to get in there and scalp some futures. Essentially, this is what we look like here. A nice big move. Fantastic stuff. Now, what is confirmation? Now, you need confirmation on lower time frames. There's no question about it. And the reason why is the lower time frame you go, and we're going to go low right now. We're going to go 1. We might even go 15-second charts or something like that. When you start going low, I think low is beneath 30 minutes. So I think a 15-minute chart, people love 5-minute charts. I've traded the 5-minute chart in the past. I don't mind it. If you're going to trade a 5-minute chart or a 1-minute chart, you need one other device to keep you out of the garbage. I call it garbage. When these markets flatten out and you're trading like a 5-8-13 and that sucker is just crossing over repeatedly, you don't want to get chopped up. Now, the beauty of small price or time frames is your losses are not going to be big. They're going to be small and manageable. That's the good news. The bad news is you're going to have to place a tremendous number of trades to establish your edge and profitability. One thing that can help you filter out those dog trades, I call them dogs. You don't want to bet on dogs, believe me. I don't know anybody that goes to the dog track and wins money. I'm sorry. But you want to be able to filter out the bad ones from the good ones. And with our confirmation device, which is the easiest one that I can put out there, and I've been doing this for about a year, strictly with the RSI confirmation, it gives us an opportunity to recognize when the market is ripe for the picking. It's like picking apples. You don't just pick every apple on the branch. You want to pick those big red ones that taste great. That's what you want. You got to do that after the first frost in the fall. We'll talk more about apple picking when the time comes a little bit later on this year. So what does confirmation mean? In technical analysis, confirmation refers to the use of an additional indicator or indicators to substantiate a trend suggested by one indicator. Okay, forget the rest of it. That's all we need to know. For our purposes, we're going to use RSI, Relative Strength Index. Wells Wilder Jr. invented this thing back in the late 70s, early 80s. It is as old as the hills, the RSI, Relative Strength Index. It tells us when a market is overbought or oversold. It does this by essentially taking a group of moving averages and averaging out those values. That's it. So forget about the rest of it. You don't need to get into the RSI math. I did it. We have an instructional video in our trading academy at How to Trade. If you want to take a deep dive in there, I think it's like a 20-minute video, and I'm not sure that it's relatively even remotely important for our purposes. We're traders. We're not market technicians necessarily. If you want to be one, you can certainly go get certified and do all that. That's great. No more power to you. Go get them. But RSI gives us an opportunity to know when to buy and when to sell. The 5813 tells us when to buy and when to sell. The 5813 will be our timing mechanism. The RSI is going to give us a broader picture of price action. When is price out of whack? Remember, all trading is figuring out when a market is in a state of disequilibrium. All right, we don't want to necessarily be trading when everybody agrees that crude oil is worth $50 a barrel and it goes up to 51 or $50.05. It comes down to 50, goes down to 54.95, comes back to 50. It sounds like we could just take that money all day. Typically, the markets are thin, you can't get filled, and it's a nightmare. What we want is when price is out of whack. We want it in a state of disequilibrium. Using the RSI, above 70 means we're overbought and we want to sell. Below 30 means we're oversold and we want to buy. We use the 5813 to time that. One more time, the concept. When price is in a state of disequilibrium, above 70, we want to sell because price typically runs and then it rotates. As it rotates, that's where we're going to make our money after the run. Okay? When we're beneath 30, we want to buy. It's easy. Price is in a state of disequilibrium when it's outside of that pricing envelope. When it is there, what are we looking for? We're looking for our mechanism, our timing mechanism, which is the 5813. 5 crosses over the 8, price is either above or below all 3 moving averages. We buy or sell accordingly. If we're overbought, we're looking for a sell. If we're oversold, we're looking for a buy. God, say that 5 times fast. That's a tongue twister. All right, let's trade it. Let's get short time frames, get some action, see if we can make some trades. Let me see. Is it better to wait for the cross? Better reward. Yeah, I mean, you have to wait for the crossover to get in to trade it. You've got to wait. So that's typically why we do it 1 bar removed. But yeah, great question. You've got to be able to wait for the crossover. If you don't, you're going to run into trouble. Don't try to guess crossovers. Don't try to guess, oh, it's going to cross, so I'm going to go now. Don't do that. You'll get absolutely torn up. You will. You'll get torn up. Let's see right here. Got it. Okay, T, I'm glad to clear that up. Pleasure. Okay, guys, here we go. 5-minute chart, EMA NASDAQ futures. You can see exactly how volatile this thing is. I'll switch on the trading DOM. Prices all over the place typically. This is actually slow for the EMA NASDAQ. Usually this thing's just racing. But this is probably a good market to be attacking if we do want to see a scalp. Now, if we're going to scalp with confirmation, the first thing we do is look at our RSI. Where's our RSI? It's right at 50. What do we have? Nothing. We don't have anything. Did we earlier? Not really. 5-minute chart. That's rare for the NASDAQ. That shows you just how dead this thing is. Let's take it down. Let's go down to a 1 minute. Can we trade a flat market on a 1 minute? Sure. It's just we got to get in on the move and the retracement back to the mean. Right here, we're right around the 50 on the 1 minute. That's terrible. Let's take it down to a 15-second. We still can't get out of whack on the 15-second. NASDAQ's dead. Typically, I go to the NASDAQ because I guarantee we can make some trades. Right here, maybe not so much. Okay, there's your bullish break. Okay, you can see this develop. Now, remember, I am in no way, shape, or form recommending that you guys trade a 15-second chart on anything. But what this will do is this will give us an opportunity to illustrate just exactly how to trade this thing. And you can see everything. Just think of this as like the speed-up feature on the trading platform where you're going really fast. Okay, right now, what has just occurred? RSI is now, it was above 70 right there. Now we're looking to sell this market. We want to sell. We want to sell. How do we sell? The 5, the red one, has to cross over the blue one, and price has to close beneath all 3 of them. Now we're watching closely. Can we get this trade? It certainly is possible. We're going to go ahead and put a market order in because we want to sell right on that bar close. No take profits. We're going to do that on the fly. I'm going to show you exactly how to do it visually, and then we're going to put this in for 4 units because why? If we're going to do it, anything worth doing is worth doing right. That's what I'm saying. So right here, what are we doing? We're in overbought territory. Now we're coming down. I always get a great question. They go, Shane, is that overbought? Are we still overbought? In my view, the overbought is going to be where we're going to put our stop loss. That would be the top of whatever time frame move we're attempting to catch, which right now we're talking about a 15-second chart. So our granularity, I mean, if you're looking at the stars, if you're an astronomer, we got the biggest telescope out possible. I mean, price action, this is it's amazing how short these time frames are. I would never trade a 15-second chart, but for our purposes today, it's going to give us a pretty good idea of how to trade this thing. All right, what are we waiting for right now? We were right here. We are waiting for this to drop a little bit more. We want that crossover. Okay, now here's where it gets tricky. Okay, price is broke. We need price to close beneath all three of our moving averages, and you need that 8 right there, that 5 to really cross that 8. Now, did it cross? No. You can't really see it right there. It does not cross. It's got to be obvious, guys. It's absolutely got to be obvious. You don't do that. It's not obvious. Bang. Would that have been a sell? Yeah, if we crossed over it. We didn't cross over it. We're still waiting for it. Obvious. It's got to be obvious. If you've got 2 moving averages that land on top of each other, you don't trade that. Why? Well, Shane, I want to get in the market. I want to get in the market too. But remember, they pay us to wait. We're looking for clean-cut examples of this methodology in action, and I believe there it is. 15-second chart, these crossovers can be tough to see. There it is, right there. Bam. There's your crossover. You want to sell right now. So we're going to go ahead. We're going to sell this thing. Of course, we got filled poorly. Where would our stop loss be? Stop loss would be right up here. I put it right above that swing high, which is very, very tight. We sold 19.10 We're up there, or excuse me, 19. I got something else on the brain. 22.9 22.910 22.920 is going to be our out. So we're looking for about 10 points here to the downside to make this thing worth our while, which is going to put us right down, right around 22 even, somewhere right there, 22.9. That's going to be the trade. That's hard. 15-second chart, NASDAQ. That's hard. See how fast we had to think? You had to know what you had to know before you needed to know it. That's why I don't go near these charts. 15-second chart. Now, if I'm in the market, maybe from a macro perspective, then I can step up and use like a 1-minute chart to manage my trades. Is this going to work? It'll probably go down and work, and everybody's going to be trading 15-second charts. I don't recommend this. I don't recommend it. I really don't. But we're about online for about 10. I mean, we were right there. I mean, take a look at our order DOM. Here's our DOM. Where would our stop or our profit target be? We just sold. I would be right in here. 9.25. I go 9.5 just to shade a little bit, but that would go ahead. That would be my buy, and that would be my stop loss. So are we there? Are we going to get paid off? Are they going to pay us? Are we going to make a fortune? Come on, we're right there. We're right there. We just need another point. Just another point. Hey! So we just made a stack of cash. That's about as good as I could have drawn it up. I mean, that's the 5-8-13. That thing came right to us beautifully. 15-second chart. We just had 4 contracts. Did we make anything? Let's see. What did we have right here? Account history. We'll go to account history right here. Yeah, we just made 780 on that trade, which, a lot of traders attack those short time frames. If you're going to do it, make sure your losses are small. That would have been a 780, so that would have been a $750 bet. You better have some money, but a lot of you guys have big prop accounts. If you want to attack the markets using something like this on a 15-second chart, that's a challenge. Be very, very careful with your risk. But I got to say that illustrated our concept beautifully. Illustrated it absolutely beautifully. All right, there's your Great Britain pound trade that this is a position. This thing's probably going to take a day or so to shake out, especially if you're shooting for anything more than this order block up here. But that's just a basic 1-to-1 trade. We'll keep an eye on that as the action develops a little bit later today. Okay, let's see. MACD for divergences. I honestly, I'm not a MACD expert. We can get into the tall grass with divergence and convergence. There's only a couple rules, guys. If it makes money for you, it's the right answer. Don't ever tell you anything. Don't ever let anybody tell you that nothing works. I use MACDs, and they say, well, you can't. Yeah, you can. You can use any of these indicators. You don't even need indicators. You can just trade price action. Some folks are great at trading price action. I'm pretty good at trading ranges. Use what you use. Walk away. Make money every day. Make money every day. Show up. Be a pit trader. Just show up, make your money, and go home. There's nothing wrong with that. Are you going to get rich and be George Soros? Probably not. Those guys got rich by getting in on huge moves. Most people think Soros caused the moves, and he did, especially with the Bank of England crash. Wow, 15-second charts seem stressing. Team Arena, it's a nightmare. I used to trade 1-minute charts. We had a system of indicators on 1-minute charts that was absolutely miserable. I mean, that was a long day. We'd start at about 7 a.m. my time and be done by 10. It was 3 hours trading 1-minute charts. That's 180 price bars doing that on 3 different markets? It's miserable. It's terrible. I hated it. I got away from it as soon as I could. Shane would make a good sports commentator. Thanks, Addy. No, I used to play sports, that's for sure. I was a college athlete back in the day. I was just thinking about my baseball days actually last week, talking about those with an old buddy. Let's see. The best advice, make money. Make money every day. I saw that on the Pit, Into the Pit, that documentary. It was a good one. There was a guy that was sort of a eccentric guy. I think his name was Greg Reba. And he made a fortune. Well, he didn't make a fortune, but he made a lot of money in the pits, back in the Chicago Merc pits. And that was his advice. Make money every day. Just make money every day. It sort of made sense to me. And that's also how I was trained by my mentor, Gary Vernier, my uncle, 7 V-Bar Trading Group. That he was big on that. He said, how much money do you need to make a month? And back then, I mean, it was like 2011. I think my bills were like I hate to talk money, but it was like $2,500 a month. I said, I need to make at least $2,500 a month. And he said, okay, you're trading the Euro FX. It's $12.50 a tick. So he sat down real easy and he said, you need $2,500 a month, huh? We're going to estimate, let's say 18 trading days a month. Okay, so we're going to take 2,500 divided by 18. That means you need to make $138 a day. And then he divided that by $12.50. And he sat there and he said, you need to figure out how to make 11 ticks a day. With commission, 12 ticks a day. You're trading the Euro FX, you need to make 12 ticks a day. So your mindset every day should be, how can I beat these guys out of 12 ticks? I'm sorry, guys. The way that I see the markets is a lot different than most people. I don't believe any academics can really trade. I'm an old pit trader kind of guy, and I trade cash. I like cash. And I have a certain target that I shoot for. And typically, if I don't get that in the first few hours of trading, then I'm not going to get it. But you find that when you know when you're supposed to perform and when you're supposed to trade, you can put yourself in positions to succeed, and it really gives you an opportunity to be a trader over the long term. You know, that's the old thing. I mean, I play for cash. I play for money. And a lot of traders don't. A lot of traders love theory. They're going to sit here and tell you the 5-8-13 and why that trade was so great and everything. I was like, yeah, we showed you exactly how that can work. But, I mean, let's look at it sort of from a different light of what I just told you about making cash. Let's say you need to make $1,000 a month or $500 a month. How many ticks did you really need out of this trade? You knew the risk. Is it worth trying to stay in there and grab that runner? That's what most people are going to tell you. 1 to 2 at least, 1 to 3, 1 to 4. I hear a lot of guys talking 10Xs. You got to get a 10X trade. And I said, listen, if I only need to make, and I'm trading a short time frame chart, if I only need to put like 8 or 9 ticks in the bank every day to hit my goal, at what point does me staying in there for a 1 to 10 runner and giving back, 5 or 10 times that on a retracement, at what point is that valuable at all to me? That's just something to think about. Psychology is everything in trading. As soon as you guys get yours nailed down, I know a lot of you do. A lot of you have been around because you've been in these streams that tells me that you're making money, or you're at least holding your own, and that's fantastic. That's what we want to see. Everybody's different. I trade the way it makes sense to me. A lot of folks, you've seen a lot of the other coaches that have come through here over the years, they trade the way that makes sense to them, and I don't have any problem with that. If you're making money, it's the right answer. To me, the make money every day thing really, really stuck in my craw, and that's why I gravitated toward the futures markets. And, investing's investing, but trading's a little bit different. All right, guys, I'm going to go ahead and sign off. I rambled on long enough today, but I hope you enjoyed the workshop, the 5-8-13. Good strategy. Take it, steal it, use it. It's not mine. It's a public domain strategy. I just sort of showed you how I would approach it and trade it. We had a decent run right there. I like that Great Britain pound USD trade, though. I do think that one has a chance. I have more confidence in that than I did the 15-second trade that won. But if, in fact, you're interested in that, take it out for a spin, do some back testing, maybe put it on your best market. Just be sure that you're trading it during active periods. If you don't put it on active periods, you're going to get in real trouble. When the market flattens out, crossover strategies do not work. We made a video on our YouTube channel 3 times you shouldn't be trading EMA crossovers. Check that one out. We talk about 3 times when don't trade them, because when that market flattens, you don't even have a chance. You'll just get chopped up to death. All right, everybody, I'm going to go ahead and sign off here for a while. Absolutely, Lita, you're welcome. Lewis, you're welcome. We're going to be back tomorrow with sort of our big stream for the week, and that's going to be trading the FOMC minutes. We're going to get in there and see exactly what to expect out of the release. We're actually going live before the FOMC minutes drop. I'm going to give you a few keys on things you need to be looking at, and a few opportunities potentially that we could take care of in real time. All right, everybody, have a fantastic trading session. Trade the action well, and we'll talk soon. See you.